Uncle, thank you so much for coming here and giving us your time. Just as a disclaimer, I've known you for 2 decades, so I'm going to call you Uncle and not Mr. Rajesh Khosla, Mr. Khosla.
I'm okay with whichever one you prefer.
Okay. So, Uncle, you're aware we run a multifamily office, and as a multifamily office and as an asset allocator, one of the questions we kept getting asked regularly and people discuss with us is on gold, right? And we essentially view gold to do 3 things for us. 1, it gives us return. Second, it gives us diversification. And third of all, it gives us liquidity, right? So commodity giving all 3 of them makes it fairly interesting. And, wanted to discuss this with someone, and who better to have than you, who've had more than 25 years of experience in this industry. You were the MD when MMTC-PAMP started, which is you set up MMTC-PAMP, yes, and MMTC-PAMP is one of the largest refinery in Asia, and the only LBMA good delivery refinery in India, if I'm right.
That is correct.
Right. So, and I know you've interacted a lot with the policymakers and the government, through your post in various industry bodies, as well as in your personal capacity. So, given this, I thought let me take some time and let us understand gold as an asset class, right? And one of the first things which comes to our mind, let's on a very basic level, what is gold as an asset class, right? We've always heard that gold plays a role during economic uncertainty, during global geopolitical situations. It is considered a safe haven. So what is gold as an asset class, and why is it important, specifically given what's happening globally and in India now?
So, as an Indian investor, as distinct from a global investor, when an Indian investor looks at gold, some parameters remain the same. It's a wealth protector. It generates some return, but return is not the only criteria for having gold in your portfolio. It provides you instant liquidity. I view gold in India as a supplemental life insurance policy.
Okay.
And as someone who is also investing, when there is an investable corpus, you look at different avenues of investment that are available to you. So if you're a very aggressive investor, you would put a lot of your money into equities, right, and take the advantage and the disadvantage as the case may be. If you're not such an aggressive investor, you would say, I'll stick to debt, government securities, which gives me a nice stable return, better than a bank FD, but I'm okay. I know that it's protected, I'm not going to lose money. And then most individuals will have a life insurance policy. Value depends on your ability. But is there something else that's available to me to diversify from these 3? And what is available now is gold. However, when you look at gold in India, you need to understand India does not produce gold.
Okay.
Therefore, what you're investing in is an item that is being imported into the country. So when you deal with an item that is imported, you're by default taking a view on its dollar value of gold outside of India. And the dollar value of gold is determined by a variety of circumstances. One, of course, is the various central banks, how they view gold, because they are the single largest buyer of gold in the world. You look at the global economy. You look, for example, predominantly at the US, and you say the US Fed has been tightening up the interest rates. If they have another tightening, more dollars will go back into the US. If dollars go back into the US, dollars will move out of gold because there's instant liquidity. And then gold will then either remain static or come down marginally. you need to remember that the principles of supply and demand do not apply to gold. It is a financial asset. The consumption in India has no relationship with the international price of gold. India may stop buying gold tomorrow and nothing is going to happen to the international price of gold. So forget supply and demand when you look at gold. In that sense, there's more stability. But you're taking a huge call on a global environment, which from an overall asset allocation, perhaps you're not taking because maybe you're focusing too much on India. And you now want to look at something more than just focusing in India, and therefore gold gives you the option.
Okay, so the way I understand, gold plays two roles, right? One, as you said, it's a protector of wealth and maybe an enhancer.
It's the most preferred protector of wealth globally.
And the second is that it is also a consumption item, like you said, in India.
It is a consumption item for what we call its downstream usage. When you import gold, you're importing what we call gold bullion in kilobars or 100-gram bars. But what is available in the market is jewelry. So a lot of people tend to confuse between gold as a protector of wealth and its consumer form, which is jewelry.
Right.
And it's when you convert gold into gold jewelry that A, you're losing value, and B, there are a lot of related ills that come along with the process of diluting purity of gold, because the gold that comes in is 24 karat, 4/9 purity. And the jewelry that you buy is 22 karat or 18. So in the process of diluting it, you are taking a call as to has it been done properly or not.
So, but then, if I combine what you said earlier and now, then essentially we are looking at two golds, right? One is a global gold and one is a gold from the Indian context, right? And that further takes me to the next point, which I'm thinking is on the pricing, because there's something which is driving the global gold prices, there's something which is driving the Indian gold prices. It's not supply demand dependent.
Let's try and look at a correlation between an international dollar gold price and its corresponding rupee gold price. Now, when you buy rupee gold, 80% of its value is derived from dollar gold.
Okay. 80%.
80%. 15% is the customs duty that you pay in rupees. So 80 plus 15 takes you to 95.
Right.
Then you have an exchange rate that is declared by the government. The government has its own way of declaring an exchange rate for valuation for customs duty purposes, and roughly 1 or 2% goes away in that. And then there is a 3% GST. So you have 80, you have 15, you have 2, you have 3, and this gives you the rupee value of gold. Now, over a period of time, if you look just at the Indian economy, let us assume for a moment that dollar gold value is static.
Okay.
Just as an assumption. Then you take a call on what is the customs duty, what is the government thinking about customs duty on gold. If there's always going to be a foreign exchange imbalance, then the government's view on gold is it's a non-essential good, and therefore I need to make it more and more difficult. So you should expect that the customs duty will go up. You should expect that the GST will go up.
Right.
However, the flip side is that in the current scenario, we are on a negative balance of trade. And therefore, by and large, the rupee is depreciating vis-a-vis the dollars anything between 8 to 10%. So that is a secured return to you because you've invested in rupees and everything else being common, dollar gold remaining the same, customs duty remaining the same, GST remaining the same, because the rupee has depreciated by 8%, the rupee value of your imported asset holding goes up by 8%.
But then, like dollar would play a role in the gold pricing, The other 20% is, the regulator. And any change in the policy would also then have an impact on the gold price, right? In India,
It will impact the rupee price of gold.
rupee price.
Definitely. So, if I was a global investor, so to speak, and not constrained by the limitations of India, I would look at dollar gold investment.
Right.
Since I do not have that facility, therefore, perforce, I need to look at rupee gold investment. And remember, when I'm looking at rupee gold, it's dollar gold plus customs duty plus GST plus forex.
Yeah.
So, does this happen when you invest in rupee securities in the stock market? The answer is no. So, which is why I say you are taking an international exposure, but you're taking a nuanced exposure. You're not investing in a physical stock overseas. You're not investing in a Tesla or a JP Morgan or something like that. You're investing in a financial asset which is predominantly determined by how central banks behave.
So one point is how central banks behave, other point is consumer, but then Indian consumer views gold differently, and then there's globally where I think central banks play a bigger role, right? So what does this mean? So are there different drivers of gold internationally and in India?
There is a different driver of gold internationally, and predominantly it is central banks and the global economic scenario. The uncertainty level, for example, when you had the Russia-Ukraine scenario, gold went up because everybody was worried what is going to happen. Now a year and a half has passed, they've understood that they need not be as scared as they were earlier. So gold has kind of stabilized. It's now, give or take, $1,800 an ounce, plus minus. The movement, the dollar price movement of gold is a great parameter for you to evaluate the global economy.
That's interesting too. That's an interesting
so,
framework.
If you need to, you will have different ways of evaluating what's happening in the world. One of the factors you should put in is what's the gold price. And if you see the gold price going up, then it's a trigger, it's telling you that people are worried. There's something that's not gelling and I need to get into the bottom of it. But if you look at gold prices, when I was much younger, I saw gold at $280 an ounce. Now, of course, I'm a lot more mature, so I see gold between $1,800 and $2,000 an ounce. So it has absolutely nothing to do with supply and demand. It has nothing to do with India's consumption. Rupee gold, as I told you, its value is determined by policies of government of India. Dollar gold value is determined by what central bankers do.
Okay.
If the Fed is tightening rates, you're going to see another issue.
So this gold is one of the oldest asset classes, right? Still fairly liquid. However, still has this some element of mistrust when you're doing trades around there and the different forms of trade, right? Not every trade, but there's some element of distrust and in the transaction and the transaction cost.
There is serious distrust. For anyone investing in gold, you can either invest in gold in a digital format or you can invest in gold as a physical format. Should you, and I call it, make the mistake of investing in physical gold, then you need to be absolutely sure of the pedigree of the gold that you're buying. If you're buying it from an unknown source or even your family jeweler, rest assured that you run a risk. The only way you can be certain of the gold you buy is if you buy it directly from a refiner. And refiners, unfortunately, deal in wholesale, they don't deal in retail. So, if you're buying physical gold, be very, very clear as to where it's coming from and try and get it from a refiner directly. Various refiners have various schemes to enable you to do this. It's not as though it's not possible. Then you run the risk of where you're going to store it.
Yes.
And you need a financial track because you need to declare it in your tax return, and you may, come under the scrutiny off and on, and therefore you need what I call complete traceability of your physical gold holding. That is a bit of a headache. There's a lot of paperwork involved. So you say, I like to invest in gold, but is there another way I can do it without these headaches? And yes, there are. The government saw this and came out with what they call a sovereign gold bond. They issue it on an average once in 3 months, once in 4 months, wherein it's priced at the 5 days average of the date of its issue. It's an 8-year bond. You get 2.5% interest on it. There is no capital gains tax on redemption.
Okay.
And at the end of the 8-year period, it is redeemed in rupees using 5 days average rupee price of gold at the time of redemption. So it's a nice way of investing in what I call non-physical gold. It's a nice way of looking at gold for a return, but it does not enable you to manage it because there is no liquidity in trading the sovereign gold bond.
You mean the secondary market?
There is no secondary market. So you have a position and you're kind of stuck with that position over an 8-year period. And over this 8-year period, apart from dollar gold, you're taking a view on what government will do in terms of taxation on gold.
Because that 20% is the regulator.
Significant.
Yeah.
You then have a simpler way of doing it, and most refineries run what they call gold accumulation plans.
Okay.
This is buying gold digitally. So they have platforms. You can go in. You can buy gold up to 1 rupee. You can buy gold up to 1 crore. There's no problem. The physical gold is retained at the refinery in a separate insured vault under a separate custodian. So the refiner has no control over the gold that it has sold to you on a digital platform. You can buy every day, you can buy whenever it suits you. If you think, hey, gold is a good time to buy gold, go ahead and buy gold. If you think that no, gold has gone up, you look at your digital statement, it's online. It does the daily mark-to-market valuation. So you can see whether your holding is making you money or not making you money. You think you want to buy more, go and buy more. Like any bank account, you can gift it to a relative. There's no problem at all. Anyone who has a gold account, if you have a gold account and I have a gold account, I can transfer my gold into your account.
And there's actual
all
physical
digitally,
gold?
Yes, all digitally.
Okay.
So it's convenient.
Yeah.
A lot more people are now wearing around, particularly the younger generation. They're digital savvy. The senior guys like me are sort of not yet so familiar with it. But the younger generation is digital savvy. They'll all open their laptop every morning and say, oh, let me open my metal account. Let me see what it is. Oh, this is the gold price. I think I've got about 1,000 rupees lying idle. Let me buy gold. So it's convenient for a particular kind of person, which I'm afraid is very distinct from a wealth manager.
Yeah.
And the third, of course, is the exchange-traded funds. We're not particularly comfortable with exchange-traded funds because there's a huge cost involved. There's a certain lack of transparency in the way the valuation is happening. So these are the 3 ways you can invest in non-physical gold in India with complete traceability, full accountability, no issues.
Well, so I think that this gold accumulation plan, that's very interesting, very less talked about.
Yes.
I think people should definitely know more about this.
It needs to be pushed a little more aggressively. More so, whereas currently it's the younger generation that's internet savvy. The elder generation, originally, you think back 50, 70, 80, 100 years ago, they used to buy these sovereigns and they would accumulate sovereigns,
Yes.
gold sovereigns.
Yes.
What was that? That was a gold accumulation plan.
But they were
Because
doing
there was
it
no
themselves in the
concept-
physical
yes,
form.
There
Yeah.
was no concept of this digital.
Yeah.
Now, the same senior citizens have the ability. The thinking is still gold accumulation.
Correct.
And they worry, where will I buy it from, what will happen, and depending on the jeweler, there are issues. I'm not running down the jewelry community,
Yeah.
but the facts. So, there is room for the senior citizens to look at a gold accumulation plan with digital gold. And they can gift it to son, daughter, daughter-in-law, family. They can sell it online. You can do what you want to do. Complete transparency, total traceability, no issues.
So now, we've talked about what is gold, the framework, how the pricing working, the ways of buying gold. But what's the outlook of gold, right? And what is the industry per se doing to get more investors to come into it? You talked about digital gold, and what are the regulators essentially thinking, and any insights on what you
the
feel can make this better?
The regulator is struggling very hard
Hmm.
to really make this a freely available financial asset, as distinct
Yes.
from a physical asset. You trade on the stock market, you buy sells, you sell shares, there are no issues at all. Unfortunately, there is only a futures market for gold in India. The MCX runs the futures market.
Correct. There is no spot.
There is no spot. So the regulator is currently seized with creating or establishing a spot gold exchange.
Okay.
There is a government directive to the regulator saying this needs to be done.
Mm-hmm.
They're financial people who are now suddenly struggling with the physical item, and there are issues with regard to the physical vis-a-vis just a financial convenience.
Yeah.
I would think that sometimes next year you will see a spot gold market in the country, and that is going to be a major change, because the way your stock market is essentially a spot market.
Mm-hmm. True.
You have spot gold market, you can then create your derivatives, you can buy, you can sell, you can do whatever you wish
So
without touching the physical.
So it becomes a much more vibrant ecosystem and a much more vibrant market.
However, if I put on a government hat,
Yeah.
I would sort of worry if I'm making it so easy or convenient for people to invest in gold, am I aggravating my balance of payments issue? Will more gold physical gold be coming in? Because every digital is backed by a physical.
Right.
So will I need to bring in more gold? And if I need to bring in more gold, what happens to my rupee? How do I maintain my dollar rupee? So the RBI, of course, has a different view. Industry believes that there should be a spot exchange. I think somewhere down the line they will come to terms with these imaginary fears, because at the end of the day, you have to give the consumer the freedom to do what he wants to do.
And so, lastly, just your insights and your views, for an investor who wants to invest in gold. And I think the investor we are talking about is typically a multifamily office or a family office. How should they look at gold as an asset class, and what should be their framework to
I can give you an insight to a global scenario. And by and large, on a global scenario, approximately 10% of the wealth is put in gold.
Okay.
Not necessarily physical, in various forms, because it is seen as the asset of last resort. If everything should go wrong, you have this to fall back upon, because this will never go wrong.
As you said, it's an insurance policy,
It's
right?
an insurance policy. If the country goes broke, if some disaster happens, it doesn't matter. Your gold is your gold.
Mm.
So, from that perspective, family offices should be looking at this. And I started off by saying that, listen, your total investment is never going to give you a guaranteed assured return in one nature of investment. And as wealth advisors,
Right.
you know that better.
Right.
So you say, listen, there's a risk-reward scenario,
Correct.
and there's only this much of risk we suggest you take, and so on and so forth. When you go down the route, then anything up to 10% in gold is a great protector of wealth. And this is a historical reality. It's not something that's come out of the air.
Thank you so much for your time. Really appreciate you giving us all these insights, and I'm quite intrigued by the framework and two different drivers, one globally, one in India.
Absolutely.
What the industry is doing, the gold accumulation plan. I think that's something very very good to hear about. And good to know your views. Thank you so much for coming, and thank you so much for your time.
On the gold accumulation plan, as an aside, most refineries operate this through financial distributors.
Okay.
The Paytms, there's the Bajaj, FinServ, so on.
Yeah.
Almost there's the banks, the financial arms of the banks that are doing this.
Perfect. Thank you so much for your time.
You're welcome.